I think at that time, very few Singaporeans, not to mention about a female talking about finance, because of this skill set, literally changed my life.
Going to be an entrepreneur, having this fear is normal because I gone through the same phase.
It's a lot harder than I thought. Imagine like if you cannot manage a 4-figure portfolio, what makes you think that you can manage 40,000 or even 400k? Most important part is what to buy, when to buy, how to invest it. If you lose a lot of money, oh my gosh, did I pick the right stock? End up, you will think that investing is not for you.
Choose to buy a property and choose to buy REITs. Which one will you choose?
I will choose to consult Ernie first before I make my property investor journey.
Yeah, I also think it that way. Welcome back to the show. I'm your host, Ernie. And if you are new here, this is the podcast where we sit down with entrepreneurs, investors, and builders who have done things differently and made real mistakes and come out the other sides with something worth sharing. Today's guest is someone I've been wanting to have for a while. She started as a journalist with zero financial background, no inheritance, no head starts, and no safety nets. Just a friend who handed her tickets to investing events in 2015 and a father's retrenchment that made her realize a salary alone was never going to be enough. Fast forward to today, she built a social media following of over 287,000 people across TikTok, YouTube, and Instagram. She's spoken on stage across Asia alongside names like Robert Kiyosaki and Mary Buffett. She runs her own investing education brands, coaches thousands of students, and by age 33, she bought her own private condo in Singapore. Not from savings, not from a bonus, but from her investments returns. She is the founder and CEO of Arigato Investors. Please welcome Chloe Lin. Hey Chloe, so you see, I will really start here because, I think that your story completely actually flips the script on how most Singaporeans actually think about wealth creation. And today we are talking about your topics like ETF, the REITs, and about passive incomes, about wealth creation. And I really want to promise that the topics today will change how our viewers really think about money. But before we dive in, hey Chloe, for anyone who wasn't understand and clear about what you do across your journey, tell us about, in your own words, who are you? And then what does Arigato Investor actually do?
Wow, I think the name of Arigato Investor is something very meaningful to me. For me, I always believe that money attract money, and if you appreciate your money, that's how you actually have more money, right? So when I first started investing, that was back in, I started learning about investing, that was 2015. At that time, I was still a journalist. So why made me want to start is because me as a journalist in the crime reporting field, I was working really long hour, and every day I just literally have to trade my time for money. So I felt very burnt out. But at the same time, I was thinking is there any way that I can make additional income, especially when I saw my dad being retrenched at a very young age, despite the fact that he was holding a very high positions in a company. That made me realize that if I only depend my income with the source of employment, that is actually the most unstable thing, right? And I think right now with the world changing, ongoing AI, I think this topic is even more relevant. But that was more than 10 years ago. I already felt I cannot just depend on one source of income. So that's how I started learning about investing. Of course, along the way, I definitely make a lot of mistakes, which can we talk about it later. But I'm just so grateful that me not giving up in this process, because that's how over the years I continue to refine the strategy that really worked for me, which is actually using ETF and then combine options. And that's how I built my $1 million portfolio at relatively young age, not too young anymore. Some of the people right now can become millionaire at an even earlier age. But I felt wow, I'm so grateful because of this skill set, literally changed my life. And that's why I call myself the Arigato Investor, because thank you
being
investing.
Thankful in life.
Yeah, being thankful in
But
life.
when you mention about portfolios as being grow up to $1 million, but give it to the viewers. For someone that maybe just want to have an understanding, start from zero, building up to $1 million, roughly what could be a good timeline and range for them?
I think the most important thing is a lot of people would think that in order to hit $1 million portfolio, you need a lot of money to start.
Yeah, I also think it that way.
I personally believe it's you start with whatever amount that you have first, and that gives you the confidence and the courage and the momentum that you need to become a millionaire investor. It's actually the reverse thinking, right? Because if you keep on thinking that, I need to wait for my first pot of gold, my first 100K, 200K before I even start, then you miss out the time that you need to hone your skill set as an investor.
So baby steps, first thing.
Yes, baby steps first thing.
Just do first.
Correct.
Learn the mistake.
Yes, you learn through it. Imagine like if you cannot manage a 4-figure portfolio, what makes you think that you can manage a 40,000 or even 400k portfolio?
That's a good point. If you cannot manage a 4 figures portfolio, don't ever think of going much bigger.
Exactly.
So start from where you are, then grow accordingly.
Yeah, I've seen so many of my students that I coach that they went through the mistake of, they wait until very long. They have a lot of money, then they start with a few 100k. But end up is they anyhow invest because they never learned before and they lost a few 100k. Then why go through that? Why not start earlier? You can start with $4,000, no problem. But when you know how to manage that $4,000 well and you see your 4k, become 10k. Isn't it? That means you actually have the skill set right now to scale your 10k to 100k.
But then I guess that you also probably gone through a journey where you make some money and then maybe at one point you lost something that maybe is a wake-up call and says, hey, this is something you got to watch it. Do you have an experience that you lost a lot?
Yes. Actually, when I first started investing, right, I didn't believe that I could be an investor. So at that time, I was with my ex, and I think that he is way smarter than me in terms of mathematics. He's very good. He's very sharp in terms of number. So as someone who is from mass communication, didn't have any financial background, any financial degree at all. So I thought, okay, why not? I don't invest because I don't think I'm very smart. I part my money with him to let him help me invest. And at that time, right, I think at the first few months, he did very well. Like he traded options. Actually, we learned about options. So he traded options very well. So I thought like, wow, okay, it's really steady. That's how I actually put more money. And in fact, I even convinced my parents to put money together with us so that we can grow this portfolio faster. But guess what? When the market turned against us, all our supposedly winning trades turned against us so much that we lost like almost $150,000 in a short 1 month period. Then that was when I realized that, oh my gosh, firstly, if I pass this control to someone else, I have no say in terms of how should the money be invested. And secondly, I felt like we actually have very different risk appetite. Like the way that he trades is very different from how I'm comfortable with. There's no right or no wrong. It's just that whether it is suitable for your own character. So that was when I realized that I cannot pass this control to someone else because we totally are different in terms of personality and as an investor. And that's how I decided to say, hey, okay, I think I really have to buck up as an investor myself. And I started to take back control and really properly learn this time rather than keep on trying to rely on someone else.
So am I right to say that you probably also find what is the best strategy that suits you, and then you hone the skill set, and then you continue to double up through like compounding?
Yes, yeah. So I think like when I eventually took back control, right, I also went to do many things. And of course, myself, when I first started really trading my own money or investing my money, of course, we all make mistakes. We've all lost money before. So I also lost money doing it on my own. But eventually I realized that after trading, after individual stock picks, which is like value investing, right? A lot of people call that, I realized that, wow, actually it's a lot harder than I thought. And what made me really have the peace of mind is actually ETF investing. Because when I do ETF, right, I don't need to be smart enough to know who will be the best stocks to invest, right? Like, is it Apple? Is this Microsoft? I don't have to guess. I just know that when I buy an ETF, right, and this solid ETF has all these wonderful companies inside my portfolio already. Then all I need to do is I keep on holding on to them, and I also do options on them as well, so that they potentially speed up the return.
So you make it one like a long-term strategy,
yes,
one of a shorter-term strategy, and then you combine both as a result.
That's right.
Oh, but you see, when I heard that you started as a journalist, but then I guess that going for a corporate. And then to a point of times that you know that investing can overtake your corporate role. So when was that moment? How do you measure about it?
Actually, at that time, right, I was considered very fortunate to be able to do that pivot. So when I was a journalist, I started learning about investing, right? And I actually joined this community for like 3 years plus. And eventually this community, they are actually looking for people who are passionate about teaching, passionate about sharing about investing, to start sharing within the community. And eventually I was given the opportunity to even go to Japan to share because I'm able to speak Japanese. So when my former founder, right? His name is Sean. He's a very amazing guy, right? So he shared with me that, hey, there's an opportunity to go to Japan. Would you like to teach in Japan? That's how I flew over and was given the opportunity to actually head the Japan operation. So I wouldn't say I was in immediately from like the first 3 years, I immediately become a full-time investor. No, it took me time because from there, I continued to work and at the same time accumulate my knowledge as well as honing my skill set as an investor, while also at the same time sharing this knowledge, this skill set with the Japanese audience. So it took me about, I think from 2015 all the way, I officially left my job and become a full-time investor and right now doing content creation. That was in 2024. So to me, it's about like 9 years, 9 to 10 years.
But you started journalist, then you went into the building of the community.
Correct.
And then followed by you went independent to becomes an educator, becomes an investor, becomes a content creator. But what was the hardest part of transiting to that phase when you decided to say, hey, you're going to do it, everything's on the end? What was the most difficult part?
I think the most difficult part is even as an investor, you will always want to have predictability of your income, right? Because only when you have predictable income, you know that, hey, every month I have this amount of money that you can continue to stay invested in the market, right? So at that time, I was at the very difficult moment saying, oh, should I actually really quit my job? Because I do enjoy my job as a trainer, but at the same time, I felt like there's only so much that I can do in a company. If I leave my job, is it possible for me to start something that I am even more passionate about, which is building my own community? And then at the same time, I also had to say goodbye to that stable sources of income and really completely kind of like depend on myself or even my investment portfolio to generate income for me. So that was a decision that took me at least 1 year to make.
But do you have that kind of moment of, as an entrepreneur, when you come out the day you run as an entrepreneur, don't have stable source of income, do you have a certain level of fear at that moment when you jump out of that space?
The fear lasted for over a year, remember? It took me like 1 year to even think about finally making a decision.
So my audience, if you are going to be an entrepreneur, having this fear is normal. Because I gone through the same phase. Right? 1 year is normal. Longer than that, because there's up and down in the journey. Especially when it's down, it's like nobody also understand what situation you've gone through. But I believe that you took on the grit and continues to push for it. But because being a content creator, you build your communities well.
Yeah.
I heard it's about 287,000 followers. Is it?
Yeah, across different social media like TikTok, IG, my own like newsletter and all this.
Well, have you thought that one day you're building this kind of volume?
Actually, I felt very fortunate that during COVID time, I started to build this. And at that time, I was still actually working with my previous company. And like my boss, once again, I thought like he's such a generous man. Like he just said, hey, try out content creation. And he started his own TikTok channel. And I was like, wow, like even, as him who is 10 years older than me, he's also doing content creation. What give me the excuse of not doing it, right? So he really inspired me to start my TikTok account. And I think at that time, I had the first mover advantage because very few Singaporeans are talking about finance, not to mention about a female talking about finance. So I think that's how when I started to put up content, it really accelerated the growth of this account within like the first 2 years. It was so fast.
But which platform works the best for you?
At the first, it was actually TikTok account.
Okay.
Yeah, so TikTok grew very fast, like 200K, right? It was within the few months' time, I already reached it. Yeah, but right now it's at the plateau journey, which I'm trying to figure out, hey, how can I expand it further? But right now, to me, the most effective way actually is IG because I felt like IG, it's more, I think people are more engaged. I don't know why. Or maybe they are not as
quick swipe as
correct. Yeah. They will really follow you for who you are. And I think the beautiful thing about IG is when they become a follower, you actually get to see the creator's content more than TikTok, which is like based on swipe, right? Even if you have followings, doesn't mean that they will actually see your content all the time. Yeah, so right now I'm actually focusing a lot more on my IG as well.
Okay, so can we put your link descriptions below?
Sure.
Can everyone please, you can follow and so that you can learn things accordingly.
Thank you.
So that's how you build. Wow, 287, impressive. Because I always feel that, for people like me, myself, when I first started, it's tough, man. It's really tough about creating things and start learning new things. It's not easy, but I respect you. 2 over years, build up this content and continues to add values to most of the people. I think this is something good.
Thank you.
But then looking back into how you get started, let's say, you mentioned that you started in 2015, but now it's 2026.
Yeah.
So passed by 1 decade.
Yeah.
Don't mention about the
Time
timeline.
flies.
So let's talk about, I guess technology comes in with, apps and everything. So what's the difference? Is it hardest to do it in 2015 or maybe easier in 2026? Which one works?
I will say when it comes to actually learning the investing, it's way easier right now.
No.
Because when I first started, right, I think very few people are teaching it. So you literally also have to go to office. Like for example, they have their own program, they have to travel down and the selection of choices are also lesser. But I felt back then, the timing was better because the market was 10 years lower than now, right? But I think there's nothing that we can choose. I think the best time to start investing is always yesterday, but we can never turn back time. So what we can do is use the current moment. And if you ask me right now, in terms of the feasibility to start investing, it's way lower. Because firstly, there's so many low-cost brokerage platforms out there.
Yeah.
Back then,
It's
was
popping up most of the time.
correct, right? Back then was you only have like 1 to 2 broker for selection, and the fees are a lot higher. I still remember there was a time that I still need to call the person, or then even text me, hey, can you help me to initiate this trade? Then they charge you higher because they help you, right? So, but right now is with low-cost brokerage platform, you literally download it in your phone. You can invest.
Just trigger it.
Yeah, just trigger it. But the most important part is then do you know what to buy or when to buy it and how to invest it? Because the accessibility can be easier. But because of that, I think a lot of people are also developing that greed that they just want to jumpstart and anyhow start, which can be dangerous. So I would say it's okay if you want to jumpstart, but you want to make sure you learn along the way so that you don't waste time in the first few years of your very precious time as an investor. That if you lose a lot of money, end up you will think that investing is not for you, then it's very sad because actually investing is really for everyone. All you need to do is make sure you do the right thing from the very beginning. You build up your momentum and you will have way more confidence to put in more money. Because I see like some of my students, right, when they are starting, they are complete beginner. So they are very afraid. They don't dare to put a lot of money, right? But because they start to see, hey, wow, even with a few $1,000s, I can also start making money in a consistent manner. Then they tell me, Chloe, now I want to put in more money because they start the right place.
But then for people that is, let's say, very new to this investing, so what are the things that they should do first?
I will always say really start with ETF.
But what about the learning journey?
The learning journey, okay, so...
I always think that,
correct.
we need clarity first. When you know what you're doing, then how to get started?
I think that the easiest way is instead of trying to pick the best stock to buy an ETF that has the best stocks inside. Like for example, S&P 500, which includes the top 500 companies in the US, be it your Microsoft, your Amazon. You don't need to be smart enough to know who will be there 10 years, 20 years down the road, because this ETF will always make sure it tracks the best leader of that economy, of that era. Right? So we can see S&P 500 composition has changed so much over the year. But because it always evolve, the next leader, it always kind of replenish itself all the time, then the stock price is just keep on going up the all time. Right? So I would say if you're a complete beginner and you have no time to really go very deep into many different things, you just buy the S&P first, start that, because that, as long as you know you're clear that you are buying the top 500 companies in the world, actually you are very safe. And when you start to see your portfolio compounding at about 10% return, which is what historically S&P 500 has given investors for the last 50 years, then, wow, with your first $5,000, you start to see, hey, I can gradually grow it out to 5-figure. This is where actually you should firstly put in more money, and secondly, also start to explore other ways of investing on top of S&P 500. Because there's so many other great ETFs that I personally like to invest, my community like to invest, that actually grow faster than S&P. And then on top of that, if you know how to use options, then you can combine that and speed up your return even more. So that journey requires time. So as you're finding more clarity and learning, right, I would say start with the S&P first. And then you build up your momentum from there. Then you continue to add on additional skill set, additional ETFs to speed up your portfolio.
But then if someone is working as an employment versus someone that is running as a business, is there a different ways of how they should allocate their amount? Or it should be the same?
I personally don't think that there should be... Okay, depends on, once again, the investment horizon. as well as I think their age, their objective, it should have some different. But at the end of the day, right, how they select right ETF to invest shouldn't be too different. Like for example, S&P 500, this is advice given by Warren Buffett, right?
Oh.
And the best investor on earth, right? He said that most people should just stick to low-cost index fund like S&P. So I would say the fundamentals shouldn't change so much. And we all know that, be it whether you are working for someone or you run your own business, you are busy, right? If you are busy, you have no time to monitor the market, then buying ETF actually serves you the best.
No problem. But then, I'm a property guy. And let's say if I still like to go into property, but I also understand that you also guide people to talking about REITs. So how would you share to the audience, let's say, should they go into the REITs or should they make it as options to ETF? Which one works better?
Okay, so for me, right, Singapore REITs, it's just a small part of my portfolio to diversify slightly outside of the US market. 90% of my portfolio is still in the US because this is where the growth lies,
I
right?
see.
And then combined with options, because in Singapore, there's no way you can do options. But why in the last 1 to 2 years, in fact, actually since last year, I started to talk more about REITs as a part of diversification is because we have seen how much REITs has dropped in the last 5 years due to the high interest rate environment. So as an investor, I will always think that when it drop, and if fundamentally this economy, like for example, you talk about Singapore as an economy, is it still intact, right? And if it is, then actually REITs could be a way to reflect how well the economy is doing. And if you believe that Singapore economy is going to grow, then the backbone, which is actually real estate, office space, I think office space a little bit impacted, but if you look about like cloud computing centers, all these are healthcare REITs, right? They have different REITs to cover different industries.
Yes.
Then you can consider actually buying a REITs ETF that once again incorporate all this industry. So as long as the Singapore economy is going to grow, then the REITs ETF as a portfolio, different sector, will also continue to grow. So I see it as a way of it being undervalued, and the dividend yield is also very attractive right now, which is more than 5% just by buying like a REITs ETF within Singapore itself.
If you have a portfolio of S&P and if you're going for REITs ETF, let's say as of now, what is probably your portfolio look like? Is it a very small segment,
Yeah.
which is the REITs component?
Yeah, it's a super small segment.
Oh, so super small segment.
Yeah,
So
it's-
you are still very
Yeah.
looking forward for the
Correct.
S&P.
Yeah, I'm still very bullish in terms of the US market. Different ETFs within the US, not just the S&P, but some of them are more growth-driven ETFs as well. Like, for example, another one is like the Nasdaq 100 QQQ, which is the top 100 companies. It has been growing like 15% year on year for the last many, many years as well. So there are multiple ETFs that inside my portfolio, and they make up of more than 90% of my
I see.
entire equity portfolio. Then Singapore is like right now less than 5%.
I see.
Yeah.
I always feel that in learning investment, not only the technical skill sets, but also the emotion, the mindset level, but they probably also becomes the main parts of the whole thing. So what do you say about that?
I absolutely agree that actually when it comes to investing, temperament is the most important thing. And Buffett says that. And I totally can resonate with it. Because previously, I didn't quite understand what do you mean by temperament, right? Like you just buy and then you just kind of like trade lah, right? But then when the market turned against me, and I still clearly remember that was during like 2021, 2022 period, I was still pretty much focusing on individual stocks, right? Because individual stocks, after all, many people will like to do that because it sounds very sexy, it sounds fast, and it sounds smart, right? When you pick the right stock. But then there was a time that it was a 1.5 year long of bear market.
Oh, I see.
And all the stocks, right, whatever stocks that you buy, it just keep on dropping all the time. And that was when it started to really make me feel uncomfortable because my portfolio at that time is already pretty big. It hasn't reached the 7-figure yet, but it's already pretty big. So when you see your portfolio dropping
Wow.
every single day at a significant amount, then you will feel like, oh my gosh, did I pick the right stock? What if I'm wrong? Right? I keep on questioning myself all the time. And that was when I start to ask myself, is there any way that I can invest more peacefully? That I know for sure this is going to go up in the long run. And that's how I start to really shift my majority of my portfolio from stock picks to ETF. Because once I pick ETF, right, I know even if it go down, right, it's okay because it will go up, right? But for stocks, I cannot say for sure. Maybe I really end up pick the right stock, a wrong stock, and it can go down to zero, right? So when I shift this, wow, I think ETF free me so much when it comes to all this stress, all this, like guessing, wow, did I do the wrong thing? Did I do the right thing? I don't need to do that anymore because I know I definitely did the right thing. I just need to make sure I have the holding power for the market to recover. And once again, it will recover. Yeah.
But when I met up with you, we did this thing like, at super early morning.
Yeah.
It's because you're flying off.
Yeah.
And that was things that it got me as a very interesting topics. Most of the people are maybe following your contents and everything, but you travel a lot. You do your own style of things, but you are not based in Singapore sometimes.
Yeah.
You travel like a few months, then you come back. So share with us your day, like as an investor, how does it fall?
Actually, last year, like what you mentioned, I traveled a lot. Last year, almost entire year, I wasn't in Singapore.
Entire year?
Almost entire year, I was in Canada. And I was staying in a farm because I wanted to experience farm life that Singapore cannot provide, right? So I went to take care of animals and horses. But the good thing about being an investor is you are really location free, right? You don't have to be in Singapore in order to initiate anything, right? Any options trade or even buy any ETFs and all this. So Canada, I can still do it. In fact, the time zone is even better. I think the most important thing is it really free you up. But in order to reach that stage, I felt like you need to give yourself patience because if you say that, wow, Chloe, I want to hit this $1 million portfolio in the next 1 to 2 years, you will only cause yourself so much stress that you end up will make a lot of silly mistakes because you want to get rich fast. So I think the whole idea is while you build up the lifestyle that gives you the freedom that you want, you have to make sure you really do the work, right? Dollar cost averaging into great ETF every single month. On top of that, if you know how to do options, you can apply options on it. Then give yourself the time. For me, it took me 10 years, but there are people who did it faster, like 7 years, right? But I think at the end of the day is you cannot expect yourself to hit that within in the last 3 years time, right? You will only cause yourself to be a lot of stress. So give yourself that long time horizon. And as long as you have the long time horizon, right, your portfolio will go towards the right direction.
So take it like the red wine.
Yeah.
You take good years to produce good products, then take times to produce a good one.
Yeah.
But then I also understand that you build a community. So you also teach people as educator. So what you do it during the travel farm time?
Yeah.
People dial in,
Yeah.
just share it with them.
Yeah, correct. So what I like to do is I always host a lot of like a webinar and workshop for my community. So yesterday I did like a SA investing workshop 2026.
Yes.
Yeah, that was like a very fun. Like my audience, I think close to 300 people joined.
Wow, impressive.
So yeah, they really love it. And I also love doing this. You know why? Because it forced me as an investor to look deeper into the topic that I want to share. So imagine I am not even interested in SA, I wouldn't be talking about this in the first place. But exactly because I felt like, hey, I want to share something more about SA, I better make sure I invest first and see how I can optimize my portfolio better. Then once I see good results, then I will share with the community. So it's actually holding me to be accountable as an investor to make sure that whatever things that I share, firstly, I do it. And secondly, it really gives me the results that I'm seeing. That's why I want to make sure I share it to the people that I want them to make money together, to grow their wealth together.
I saw your sharing.
Yeah.
You say how your SA grow like what, 8%, is it?
Yeah, actually 9% in the last 9 months. I was very shocked as well. Yeah.
9%. So SA can grow.
SA can grow. Yeah, so I think 1 year ago, if you tell me, I wouldn't bother. I was like, yeah, just put it like 4% enough already. But then when I started to realize that actually SA can grow, then I went to look deeper. I started doing it and I realized that it really can grow. And that's how give me more confidence to encourage people to also consider SA investing. Yeah. So I do many these kind of like, be it free workshop whatsoever inside my own community as well. So feel free to join if you want to like stay up to date of what's happening next as well.
Well, it's the power of giving. And the power of giving start from the heart first.
Yeah.
All right, you make sure that the communities really gains values. And I believe that if they really want to learn more, they do sign up for some things from
so I have my Telegram channel or even my newsletter where I constantly will share about all the latest happening, what's going to happen inside my next workshop. And in fact, also I'll have my free options workshop as well. But I think everything can be found inside my Telegram or even my newsletter as well.
No problem. But I also know that you travel a lot. But at the same time, you also shared with people that you bought a property.
Oh, yes.
And then you rent it out.
Yes, now I rent it out.
Just like you talk about REITs. You talk about, let's say you bought a property. Actually, which one will you choose if you have a choice again? Let's say the same portfolio, I don't know, same amount that you can choose to buy a property, you can choose to buy REITs. Which one works for you?
I will choose to consult Ernie first before I make my property investment journey. Okay, guys,
But let's say your choice, let's say.
right
No
now,
right or wrong. I mean, just your choice.
I really wouldn't just choose between these two because I would still prefer my ETF to be inside, right?
I think that's your strength.
That is my
right?
number one.
So whichever strength you are in, just go
Correct.
double down, triple down.
Yeah, that's right.
Stick it that way.
Yeah, and like what you said, right? I think ETF options investing is my strength. And when I invested my property, which was 2021, I completely ignored the fact that I should do it properly. And I took it for granted that Singapore property will always go up. I thought so. And then I just bought. And for some reason, it actually hasn't been doing well. Yeah.
Because we are talking about it, right? Then I tell you, okay, why selection of that one?
Yeah.
Then we thought, okay, never mind, we should maybe talk about it next.
Yes, yeah. In my episode, okay, I will share with you guys my property investing mistakes. Then I will ask Ernie for advice for that.
Well, we spar ideas in learning. So for people that really wants to learn about ETF learning, please look for you. Anything else, and we can talk about it. But let's say if you are given a chance to go back to your younger self, and she's very young really. Let's say you go back to your younger self, then what would you tell to yourself? What are the things to get started?
I think firstly is enhance your skill set. I recently did a video telling my my younger self, so what I could have done better. I think the first thing is, if you ask me about 15 years ago when I was still in university, the first thing I will start considering doing is actually take up more internship. Because only when you expose yourself to different fields, or different career path, you will know what works for you, what doesn't work for you, what sparks you joy, what drains you. Then you are able to find a career path that suits you more, you are able to accelerate more. So I think I'm super grateful and fortunate in a way that during my first few years of journalism, even though it didn't spark me a lot of joy, but because I was able to know my former boss and he gave me the opportunity to do career pivot, that's when I realized that, oh my gosh, I really love like doing this, training, sharing my knowledge. And I think a lot of people wouldn't be able to know what they love at first. So only when you do multiple exposure like this, through taking up all the different kind of like mini shop jobs or internship, you know what drives you and what don't, right? So start with that. And once you find a skill set that you love, right, double down on it. Because only when you learn that skill set, you are able to make money with it, then you will have also more money to start investing, right? So you can start small first, because when everybody start, you wouldn't have a lot of money to begin with, but you start that already. But now imagine you increase your earning income power. Now you have the ability to fund more into your account and grow it even faster. So I would say hone your skill set, and at the same time, find that high income producing skill set that you can give you first, and then simultaneously also start investing. Like for example, just the basic S&P 500 also can, right? And then from there, once you realize that, with your skill set, you're able to produce an income, then how can I increase my portfolio return even more? Then invest more.
So that's how you will do it.
Yeah.
You won't advise them to just go straight and do 100% investment. Don't do anything, just becomes an investor.
I wouldn't recommend that, because
you're going to be stressful, right?
You're going to be stressful. Imagine you already don't have a lot of money in your bank account, and then you depend on your trading account to give you money. Firstly, it's very emotionally tiring that you have to depend on market every day. And market actually goes against you sometimes, right? It doesn't follow what you want all the time, right? So then when you lose or you have bad trades, then what are you going to do? Are you going to don't eat that month, right? Or are you going to penalize yourself, and then basically it's a lot of stress, right? So I would say, if you can, don't depend on your portfolio for income until your portfolio really become very consistent that, hey, anytime should anything happen, you are able to still withstand for the next 6 months, right? Then no problem.
But there's also, investment, right? I'm not the best person to talk about it, but some of the people tell me that, they started with 30,000, let's say. Then they make a grow of 3,000. Then they tell me that, but there's nothing much they can do about it. But to me, right, am I right to say you probably should focus on actually what's the percentage of returns?
Yes, correct.
Then you get yourself more motivated in a sense, rather than looking at the figures.
Yeah.
Then some of my friends will tell me, because my pot is not big, so no matter how I do, I can't make a change. What do you think about this statement?
I would say that because they are looking at very short-term time frame.
So let's talk about time frame.
Yeah.
What will be the good time frame for people?
I think, in my opinion, you should at least stretch your horizon to 10 years or more.
10 years. So 10 years is a good period.
Yeah, it's a very good period to really start to see substantial returns for your portfolio. Like for me, it took me 10 years to hit my million. If I were like people who say, wow, when I first started with a few $1,000, a few $100 return, which is actually more than 10% already, right?
Yeah,
Then,
focus percentage.
Yeah, I focus on percentage, right? It actually shows that you are able to generate that percentage even with a small portfolio. Then when you have more money, which all of us, I think 90% of people are employed, then at least you know actually every single month you have some sources of income coming in. Instead of spending it all, can you set aside 10% or even 20% of income to invest? Because only when you have the consistency managing a smaller portfolio first, then when you have more income coming in, now you are managing the consistency on a bigger pot. So that's how your portfolio will grow bigger and faster. And once the tipping point reach until that level that right now, right, when your portfolio is able to have a bigger return on a bigger scale, it becomes a snowball that is unstoppable. But many people don't see that. They only want to see immediate results. But in order for you to have that, you must make sure you endure this first, right? Just like stocks, right? If you sell it at the first 100%, you will never hit your 1000%. Right? So if you give up at your first 10% and you think that 10% is not going to make for you, then you will miss out the 100%, the 200 or even 1000% return in the long run.
So first thing, look into the time horizon, maybe 10 years.
Yeah.
And then do not focus on the figures of how much you make, but maybe the percentage of returns. Then snowball it over the period of time, grow a portfolios, and then you grow there.
Yeah. So I think it's really building up the confidence and a skill set as an investor first before you want to think about, oh, how can I grow my portfolio like wow, very fast.
No problem. And before we end here, I do understand that you share a lot of details about your sharings and everything. So please, you can follow and find you through what?
Yeah, you can find me on Instagram. Recently, my Instagram, the original account got reported by scammers. So I lost my original bigger account, so I restarted a new one.
Hey, yeah, scamming is scary. Can I just talk about this thing? I saw your face before, but it's not you.
It's not me.
Yeah.
It's like with AI video right now, they took my original video and then they do the AI tweak, right? That as if my mouth is talking, but it's actually not me. Because it's very obvious. When you see those scammers video, they will just say, oh, join this community 10% or like, I don't know how you will guaranteed to make this amount. Wow. Immediately when you hear this kind of thing, right, you actually should red flag that it's a...
and the video say that you pick whichever, don't know, stocks and you're going to tell them what is the next one to make money.
Yeah.
Wow, it's so scary.
It's very scary. So be careful, all right? You want to make sure you follow the right person, the right account. And for me, I only have right now only one IG account that I started from scratch called Arigato Investor .official. So right now I only have 1,005 followers.
Oh, so that's the reason you got to restart.
I have the restart. But it's okay. At least this is the official account and I blue tick this time. I blue tick it. So no more being reported fake account.
So people can follow you there.
Yeah.
Can they go? Is there a website?
Yes, I also have my website, arigatoinvestor.com, where I also have a lot of free resources over there as well, including my free options masterclass, like a portfolio tracker. Yeah, so feel free to also, like, if you want to have a portfolio tracker, feel free to also go there to download it for yourself as well. And last but not least, it's my Telegram, right? Yeah. So t.me/Arigato Investor, where I post a lot of updates about my upcoming workshops, what's happening. Yeah, so feel free to follow me there.
So people will just be able to just join some of the updates that you will be.
Yes, correct. So it's a public community channel. It's not a group. So if you receive any DM that's not me, I don't DM anyone
No DM.
Yeah, no DM, no DM. So it's my public channel. Yeah.
Okay, no problem. So audience, I hope that you enjoy what we have shared today. Any last things there for them before we move up?
I feel at the end of the day is don't need to stress too much whether are you making a lot of money right now from your investment portfolio, but really give yourself the time and the patience that you need to hone up your skill set as an investor. Because only when you are patient about it, you are at ease, then you are able to really navigate through different volatility and uncertainty with ease because you know that you did the right thing, right? So give yourself the time and patience to expand as an investor, and that's how your portfolio will expand as well. So of course, along the way, keep on learning so that you can also learn how to optimize your return better. Yeah.
Okay, will do.
Thank you.
All right, everybody, I hope that you have a great session. But if you think that this podcast is helpful, please continue to subscribe and then follow us, and we can continue to produce good topics about entrepreneurs, investors, and moving forward to share more details with you.
Thank you, Ernie,
Okay.
so much for
Thank you.
inviting me to your podcast. It's been amazing.
Take care, everybody. Take care.
Bye.